And besides, I'm not gonna be the only presenter here. So let me just share my screen. I hope you see my screen. Basically, if you have some feedback or some questions, for me, it's the best if you use basically the chat, because I'm not quite sure what happened basically with my audio settings. It looks that way actually, that in Hungary it's like 40 degrees at the moment. So it might affected my laptop, unfortunately, a little bit. So perhaps in the meantime, I will try to speak a little bit with my audio settings, but nevertheless, I think it's gonna be okay. I mean, at least you can hear me, so you can chat me, so I can answer questions. So I hope it's going to be working. David, thanks a lot for your help. So basically, we are live streamed on YouTube. And then again, I'm not sure if my audio perfectly works. So anything working or not working, just drop me something basically on chat. So that's the best way if we can communicate somehow. Anyway, so basically, this is Hyperledger Budapest. This is a special event actually, a little bit. We try to set up one special meetup basically on the topic of CBDC and DLT combination. So basically, CBDC is the central bank digital currency, and then we're gonna investigate a little bit in the direction if CBDC can be realized with a distributed ledger technology. And besides, we're not just gonna have technical presentations, but we will have like two less technical and a little bit more economical presentations based on different CBDC properties and economical impacts. It's just a meetup, so feel free anytime to ask me again or ask any of the presenters. I guess again for me you can ask in chat because I have some difficulties, unfortunately. So I think instead of speaking much, I would like just to introduce our first presenter, Adam. Adam is a product owner at OTP Bank, and he's a CBDC researcher as well. And as far as I know, he leads basically a team of researchers and engineers as well in the direction of CBDC research and, well, hopefully slowly implementation as well. So basically, let me just try to stop my screen share, and basically, Adam, the floor is yours. So let me just take a look if you can take over the session and then continue the presentation.
All right, thanks. Right, it seems like I have the permission to share my screen, so you should be able to see my screen now, hopefully. So hello and good afternoon, everyone. My name is Adam Redkes. I'm an IT product owner at the OTP Bank. I work with a senior developer team, and we build distributed core banking systems like the instant payment system in Hungary. For more than a year, I've started to engage in the work of researching the design and implementation best practices of CBDCs, mostly wholesale CBDCs, specializing in cross-border interbank settlement. And I believe that's why I'm here today, because today's topic is the future of cross-border interbank payments, the wholesale CBDCs. So let's dive into it. If I can switch to the next slide. Okay. So today's agenda goes this way. First, I'm going to give you a quick overview about CBDCs in general. Then I will show you the current ongoing wholesale CBDC projects in the world. We will see the reasons behind the sudden interest in wholesale CBDC development. And after that, answer the question if these CBDC developments really worth it. So let's take a look at CBDCs in general. At the moment, the public can hold money issued by the central bank in the form of banknotes, but only banks and certain other financial institutions can hold electronic central bank money in the form of central bank reserves, of course. Alongside these conventional means of payment, we are living in the world of ever-growing cryptocurrencies for a decade or so. And CBDC aims to bring in the best of both worlds, the convenience and the security of digital forms like cryptocurrencies, and the regulated and reserve-backed money circulation of the traditional banking system. Needless to say, but the particular central bank or the other competent monetary authority of the country will be solely reliable for its CBDC operations. Although there is no exact definition of central bank digital currencies, one can say that CBDC is a secure digital instrument, a store of value, and an official unit of account. There are two types of CBDCs distinguished by their availability. The broadly available retail CBDCs used and held by households and businesses to make payments and basically store value, and wholesale CBDCs used by financial institutions. This one could be the next, the new unit of interbank and securities settlement. And that's what we will be talking about in the next minutes. I believe the best way to interpret where CBDCs exactly stand in the world of different money forms is the money flower taxonomy, as you can see here. It has four categories or attributes. Is the money widely accessible is the first one. Is it digital? Is it issued by a central bank? And is the access token-based or account-based? We can find cash and bank deposits on the left, the usual assets that we use most in our lives, or just cash if you're in Germany. Cryptocurrencies are also on the table at the bottom of the figure. And now down we arrive to the central bank reserves in the upper middle part of the figure. I'd like to draw your attention to this one because it is issued by a central bank. It is digital, so technically we should call it a CBDC, but we won't. Central bank reserves represent the status quo, the account-based money. These are units of domestic interbank settlement existing in siloed RTGS real-time gross settlement systems, and they are totally incapable of executing cross-border payments. So finally, as you can see, there are three CBDC categories on the figure from left to right. Central bank digital currency, the first one. It is an account-based central bank money. How should I put it? Imagine that tomorrow you wake up and walk in a central bank local branch to open an account instead of in a commercial bank. The money that you'd have in that account is this CBDC. The People's Bank of China is likely to use this form, but Daniel will talk about it later. Central bank digital tokens, the retail ones, is the next. It is broadly accessible, but unlike the previous one, the tokenized retail CBDC's access is granted through CBDC wallets. Therefore, central banks don't have the pressure to open local branches, recruit clerks, and expand their operations. The CBDC units stored on those wallets are like the digital representation of physical cash. The Bahamas Cent Dollar project uses this form of CBDC. And last but not least, wholesale CBDC tokens. That's today's topic. It is differentiated in access from the previous one. Commercial banks and financial intermediaries are eligible to hold these CBDC tokens to execute domestic, cross-border payments, and security settlement on a payment versus payment delivery basis. And why is all the fuss around CBDCs? Check this map out. As you can see from the east to west, a lot of countries are actively developing wholesale CBDC proof of concepts and also initiating pilot projects. Most notably, there are 4 big wholesale CBDC projects taking place right now. Project Stella between the European Central Bank and the Bank of Japan. Project Jasper Ubin between the Bank of Canada and the Monetary Authority of Singapore. It is based on interlinking distinct CBDC systems using hash time-locked contracts. Project Aber between the United Arab Emirates and Saudi Arabia is a joint CBDC system with a common synthetic currency pegged to the US dollar. And last, Project Internal Lion Rock between the Bank of Thailand and the Hong Kong Monetary Authority. A common CBDC payment corridor was established using Corda nodes in this one. These bilateral projects serve the same purpose: to test the limits of DLT technology and to build an exceedingly efficient cross-border payment system. So why are those projects really necessary? As you may know, currently international money transfers are handled by correspondent banks. You initiate a transaction at your local bank and wait for the money and the miracle to arrive to its destination. During that process, multiple commercial banks handle your transaction. And why is it a problem? First of all, the lack of transparency. They don't provide real-time data of the transaction. So once your money is out of your home country's jurisdiction, you don't know where exactly it is in the world. And the most annoying thing is, in my opinion, that there are no preliminary calculations of the final transaction fee. So you'll be charged with a random correspondent banking fee afterwards. And moreover, different monetary jurisdictions have their own real-time gross settlement systems, which means those systems typically have different operating hours, which means limited availability. For example, if you initiate a transaction on, let's say, on Thursday, that arrives to the target country on late Friday, then you'll have to wait for the domestic transaction settlement in the target country till Monday, when the local RTGS system is open again for settlement. Also, limited interoperability. These RTGS systems were built around 20 years ago with those times technical capabilities. They use different transaction message standards and protocols, so they are not really great in working together. The idea of connecting RTGS systems to make cross-border settlement better would leave a lot to be desired, in my opinion. Costly correspondent banking system. Like I mentioned, that transparency issues, all correspondent banks charge the international transactions with their correspondent service fees to cover the cost of their presence in a foreign country and to make some profit, but that goes without saying. Which is okay, but if you accumulate the multiple bank fees, when multiple intermediary banks are involved, a good deal of money is to be expected. And last but not least, usage of legacy systems. Most core banking systems are outdated. Banks need to switch to new ones, and compatibility with CBDC systems requires the usage of systems built with competitive technology and built to last, which is easier said than done, let's be honest. These core systems change projects usually requires years to finish. But of course, the parallel maintenance of legacy and new generation systems comes with high operational expenditures. So these are the main challenges of current cross-border payment systems that needs to be resolved. Let's see how wholesale CBDC projects perform. All pilot projects operate with lower operational expenditures than the correspondent banks. So is the CBDC the answer to these pain points? I believe that they are, because as you can see by Jasper Rubin and Aber project, they can provide real-time transaction status and preliminary fee calculations. So it is much better to know beforehand how much the transaction will cost and where is my money in the world. All pilot projects can work 24/7 with high availability, unlike the current systems. All pilot projects operate with lower operational expenditures, like I said, and interoperability is a cornerstone of CBDC development. Whether it is an interlinkage solution, a multiple CBDC, or a synthetic CBDC, the key is to make the country's CBDC systems work together and allow others to easily join to them. On the other hand, there are implementation aspects that must be taken into consideration when designing a CBDC. Not every economic area needs a CBDC, like the European Union. Target 2, the RTGS system of the European Central Bank, serves the Eurozone I think perfectly. You can make euro payments to another European country within 4 hours for the price of a simple domestic transaction. The benefits of a wholesale CBDC system for payment settlement would be marginal, really. Choosing proper technology stack. There are 3 main DLT payment market infrastructure firms in the world that the central banks previously examined. All of them have their own constraints and benefits, and not even one of them is perfect for the local wholesale CBDC pilots. So we have a lot to work on. As far as I'm aware, building a joint wholesale CBDC system is as much of a political question as a payment market infrastructure efficiency question. The government's full political support is needed behind these projects to deliver the expected results, but Daniel will talk about it in the next session. So just to summarize what we've been talking about, current cross-border payment services have significant pain points that the new generation CBDC system should answer. Wholesale CBDCs could be certainly better with lower maintenance costs, more settlement opportunities, real-time transaction tracking, and transparent operation. And wholesale CBDCs could open the door to new economic areas like the One Belt, One Road initiative. So all in all, thank you for your attention. And now I'll pass the word to Daniel, if you can hear me. If not,
yes,
then...
yeah. Thank you, Adam. Do we have questions now, or we will return to the Q&A session in the end? Okay, so let's choose the other one. So I share my screen, and thank you very much, Adam.
Yeah, awesome. Thanks for the great presentation. So in the meantime, actually, my microphone still doesn't work, but I can hear you guys on YouTube. So I would just ask actually like 2 more minutes if there's questions for this presentation, perhaps, and then after that I would propose to continue.
Can we post questions not in writing too? Sorry. Hey, Daniel.
Yes. I'm sorry. So could you repeat it?
Yeah. Can we post questions orally too? That was my question. I would have one question with respect.
Yeah, absolutely. I can hear you.
Okay, thank you. Great. Hi all. I'm Imre Kocsis from the Budapest University of Technology and Economics. It was a very nice presentation. What struck me a bit was that we saw the choice of technology stack as an issue with WCBDCs, and all we saw there were distributed ledger technologies. Does the banking world equate WCBDCs with DLTs, or is there still some design room or uncertainty? So to simplify, one can create a wholesale CBDC system in a centralized way too. Is that off the table or not completely?
I'm sorry, Adam will answer the question. I'm Daniel. Okay.
Thank you for the question. Yes, of course, not centralized ledgers and account-based access form are not off the table, of course. It's just the central banks in the last 1 or 2 years initiated these pilot projects to experiment with distributed ledger technology, but that should not mean that they've chosen this technology stack solely. But what we know for sure that the project documentations and the project publications are about using DLT technology from different aspects for different business use cases, and none of them were built on a centralized ledger technology. It could work, of course. It could be very scalable. It could be proven to be the best solution, but now most central banks try to build up a new payment market infrastructure on DLT technology. And that's what these projects were about.
Thanks. I'm personally researching the retail side, but just wanted to ask this with respect to the wholesale part. Thanks.
Do you have any questions related to wholesale CBDC systems?
So awesome. If there's no more question, I mean, we're gonna have, of course, basically a longer discussion around at the end of the presentation and at the end of the like free presentations. But if there's like no more questions, I would like to introduce our next speaker, Daniel. He's head of distribution at Portfolio Financial, and again a CBDC researcher and enthusiast. So Daniel, basically the floor is yours for your presentation.
Okay, thank you, Daniel. So thanks for having me today. It's a pleasure being here. So I share my screen again, and yeah, here it is. Hopefully you can see the screen. Yeah, so Adam had great thoughts about wholesale CBDC, and I will refer to many of them in my presentation. So yeah, I started analyzing CBDCs from a global macroeconomic perspective, and it is because I come from an investment background, and yeah, we managed investment funds, but I can see huge technological transformation going through with central bank digital currencies. And but now this impacts the financial markets through cryptocurrencies and most notably through Bitcoin. But I can see more tectonic shifts in finance, in investment, and also in geopolitics. And that is why I think central bank digital currencies is of utmost importance in these fields. So my presentation is based on my most recent publication, which was sent to central bank tenders, and I hope it will be public soon. But I will share the major thoughts from the paper with you. And I hope we will have a fruitful conversation, and we are very open for further discussion as well. So let's jump into it. So quartering the US dollar sharing global trade. Maybe this sounds strange at first, but CBDCs have the potential to transform not just global payment, as Adam demonstrated to you, but also trade. And from trade, it is able to transform monetary politics, monetary policies, and other fields of finance as well. So since the dollar is the most dominant currency in payment, in forex reserves, and in forex trade, CBDCs through payment and trade could replace its dominant status with local currencies, and that is why it is a huge topic. And secondly, about the title. So digital renminbi gained popularity by media most recently during the springtime. So you could read from Financial Times, from Politico, and from major political and economical sites that the Chinese digital renminbi is the biggest threat to the dominance of the US dollar. And many headlines headlines were written about it. So I venture to demonstrate in my paper and in the presentation that China is just the major driver against the entrenched system of eurodollars, but not the renminbi itself is the biggest challenge against the eurodollar, but the Chinese CBDC system is the biggest challenge against the current status quo of reserve currencies. So that is one. That is a second point of the presentation. And the third one is that, as you can see in the subtitle, that we should be aware that there are many global CBDC projects underway, both retail and wholesale, as Adam showed it to you in the previous presentation. Yeah, so every country which is researching or piloting CBDCs or went live with the CBDC are very careful. But we shouldn't ignore the fact that these central bank digital currency projects could be interoperable one time with each other. And as Adam said, it has many economic benefits. But at the end of the day, it's much like a political decision at first, and the decision makers of each country could have political perspectives on top of improving the cross-border interbank payment system. So that is why central bank digital currency opens many new universes in the field of finance and macroeconomics. So let's start with the next slide, or continue with the next slide. So I mentioned the Chinese digital currency, and all start from the purpose of China, that it is intended to internationalize the Chinese renminbi, and for this, they established an initiative which is called the Belt and Road Initiative, or One Belt, One Road project, as Adam said previously. And maybe you heard about this project, but if you haven't, just imagine an umbrella which the Chinese established, and under this umbrella, every economic and technology projects are thrown under, and the main aim of the Belt and Road Initiative is to initiate trade cooperations and integrating the global trade in a more effective way. So that is BRI about. But BRI is a huge topic, and it has many angles. One angle is the renminbi versus the dollar angle. So that we can see the fight between the Chinese renminbi and the US dollar. I analyzed that since the 2008 financial crisis, China tried to internationalize the renminbi in many different ways. They established swap lines with half of the world. They provided almost as many loans as the World Bank to the emerging markets, and the Chinese renminbi was taken up to the IMF's special drawing rights basket. So the Chinese had many attempts in case of internationalizing the renminbi, but as you can see in this table, they were less successful till these days, because the share of the renminbi in forex trade, in official forex reserves, or in global payments is just marginal till recent days. And the Chinese and China experienced that despite the size of their huge economy, the renminbi's share in global finances is still very very limited. So they asked about themselves that, cannot we join a club? No, the answer was. So they said, let's establish our own club. So that is why in 2014, they started researching their central bank digital currency with their central bank, the People's Republic of China, which is abbreviated by the PBOC. So it all started 7 years ago. And the next date, which is very remarkable, it's 2019, when Facebook's Libra project came into light, and the media was very loud with this topic. And around those times, China just made public their research and initiative, and since then it gained a lot of popularity. And then in 2020, it was public that they started a retail pilot project in Shanghai, in 4 major cities like Shenzhen, Chengdu, and so on. And the next target date is 2022 in the winter times, which is the Winter Olympic Games in Beijing. And as you may know, their intention is to get ready with the retail Chinese CBDC, and not just resident people, but also tourists and business travelers from foreign countries will be able to use the Chinese CBDC in China. And yeah, the future dates will contain many exciting episodes, in my opinion. For example, in cross-border retail and in cross-border wholesale CBDC as well. So that's the story from the Chinese perspective, and China was, we can say, the first country or first major country which was researching CBDCs, and their research project started with a political motive, and the first political motive was to control their domestic financial money supply. Because as you may see in this chart, there are about 800 million people from the 1.3 billion people in China who use mobile phone for payment in China, and this 800 million people is covered by two private companies, Alibaba and Tencent, with their mobile applications. And the value of mobile payments is around $50 trillion. So I hardly can say any comparable things to it, but it's a huge value, and maybe it's a surprise, but this number dwarfs the US mobile payment market. It's more than 10,000 times the US's mobile payment industry. So it's a huge share, and China's first purpose was to control the domestic financial money supply. The second purpose was to become independent or less dependent on the US dollar, which caused a deeper recession to them during the 2008 and 2009 financial crisis. So these domestic and international purpose drove China in this path to establish a retail and the cross-border CBDC for them, and it can be used under the Belt and Road Initiative for internationalizing the renminbi. Okay, but how does geopolitics and central bank digital currencies connect with each other? As Adam evidenced to you, wholesale CBDCs could make cross-border payments more effective, cheaper, quicker, more transparent, and so on. It's one thing, but we should be aware that central bank digital currencies could provide a dependent field, a dependent corridor for making payments and executing trade. So that is why we should analyze the geopolitical and macroeconomic effect of it. So first of all, CBDCs could be or CBDC transactions could be executed outside the SWIFT or the US-based CHIPS system, and it's a huge counter weapon because the US or the EU use sanctions against some countries during these SWIFT and CHIPS financial message transporting system. So the financial sanctions through the US dollar could be marginalized if countries establish their own CBDC system, and it can be fully independent from the existing financial systems as well. Another point is that taking the example of China could invite other Belt and Road Initiative members to join their CBDC club. So many countries could be tempted to establish a CBDC in order to get out of the control of the US or the EU surveillance system. And okay, there are many other financial privacy questions unanswered, but from a political or geopolitical perspective, it can be a huge temptation. In theory, it's not evidence, but with the CBDC, countries could establish partially open capital accounts as well, which means that which could mean that the countries can decide which portfolio or private money flows should enter the country of a given country, and that's a huge asset as well. So the dollar or other reserve currency denomination or invoicing of trade could change. So countries for let's say commodity trades or resource trades or goods trade don't need to use dollar for invoicing their trades. Because the wholesale CBDC, the local currencies are able to execute those trades without the US dollar or the euro. So one consequence is that the weights of local currencies can increase in global trade on the expense of the US dollar. And as I said in the introduction, if payment and trade is revolutionized, then other areas of finance are affected as well. For example, the foreign exchange reserves of central banks, the forex trade, the debt finance, and the whole international monetary system could go through tectonic changes if central bank digital currencies are applied. And finally, I had some quick back of the envelope calculations, and I calculated that China accounts for 1/4 of the global trade. And the global trade is around $20 trillion, and China has a trade number of $4 trillion without the US trade figures. So it's about a quarter of this global trade figure. And assuming that the Chinese trades are mostly executed in dollar, if China and all the Chinese trading partners would execute trade in local CBDCs, then the share of the US dollar could rapidly fall around by 20%. That's a pessimistic scenario, but one real scenario. And then if we assume that then the share that every foreign trade could be executed in CBDCs, and the US has around 20% share in global exports, then the US dollar share in global trade could be quartered. from this 40% that I demonstrated to you in this table. So in a nutshell, CBDCs have the potential to make the current share of reserve currencies to their fractions, and that is a huge macroeconomic topic. I won't dig deep into the numbers. We talked about it in this section, but what I want to highlight is that the Southeast Asian market or region is the leader in the development of central bank digital currencies, both in the retail side and in the wholesale side as well. So to sum up, seven Southeast Asian countries are among the top CBDC developer countries in the world. Yeah, and finally, let's say the geopolitical map of CBDCs. It was elaborated by myself, and with its circular motifs and straight lines. I ventured to demonstrate how the wholesale renminbi CBDC could flood the world and establish new payment and trade relationships. These abbreviations are very important partnerships, global partnerships in the world economy. One short side note, as you may know, the Chinese like playing Go. You know, Go is a similar game to chess, and Go is a game of encirclement. And you can see that maybe the Chinese digital currency or central bank digital currency could be the Go attack against the US dollar or the euro dollar financial system with its circular motifs. So the first category includes major deals in the world economy. The first one is the Regional Comprehensive Economic Agreement, which was signed by the 15 Southeast Asian members. And the aim of this deal is to integrating trade and making trade more effective by eliminating or decreasing taxes in the region. And I guess that making trade more effective could be done via CBDC. So as we saw in these charts or tables, it is not an accident. So the Southeast Asian economies are advanced in this CBDC development. So we can safely assume that in a few years' time, trade will be executed in wholesale CBDCs in the Southeast Asian region. Another important partnership is this OBOR, or One Belt One Road, or other called the Belt and Road Initiative. By now it contains almost 140 countries. So one day trade among these countries in the Belt and Road Initiative could be executed by wholesale CBDC, which is driven by China. Another assumption is that commodity exports, for example, oil exports from the Arabian countries to China, could also be executed in wholesale CBDCs and not in US dollar. And the evidence, and it can be strong evidence that the United Arab Emirates just recently joined the multi-CBDC bridge initiative, which is a CBDC initiative by Thailand, Hong Kong, China, and the United Arab Emirates under the supervisory of the Bank of International Settlements. So it's not just a fairy tale that commodity exports could be executed with wholesale CBDCs, because why would the United Arab Emirates join to a Chinese project in CBDC? The other options are the CIPS and SWIFT. They are payment and settlement systems, as you may know, but these are these cover the whole world. So we can assume that CBDC will be interoperable to CIPS and SWIFT, and it can increase its weight in the global economy. The other important ones are UnionPay, which is a payment company. UnionPay is present in about 180 countries in the world, so we can also assume that Chinese retail CBDCs will be usable in the countries all over the world where UnionPay is present. And one fun fact is that McDonald's or Starbucks take part in the retail pilot projects of China. So we also can assume that if China allows to use retail Chinese CBDC in China, then why wouldn't it allow to use Chinese retail CBDC in Europe or Russia or America? So for Chinese tourists. So these are potential channels in which the Chinese digital renminbi could flood the world. And the one last thing is this DSR, or Digital Silk Road. It's an angle of the One Belt One Road, and it's about that China is helping poor or less developed countries to establish telecommunication infrastructure or artificial intelligence platforms in order to have their surveillance activities in these less developed countries. But why wouldn't these projects denominated in digital renminbi or wouldn't be executed in CBDCs? So these are just theories, but there are strong assumptions that they could be reality in some years' time. And finally, so as we mentioned, and Adam also highlighted to you, there are many CBDC projects around the world, and Adam demonstrated the wholesale ones to you. The wholesale projects are highlighted with blue or with purple color. So so in theory, if these CBDC projects will connect and will be interoperable with each other, it could totally transform the global financial system. And yeah, to sum up my presentation, I expect that a new order in global payments will emerge through CBDCs. Their economic effects are proved, and their political considerations are just underway. But politics is a very strong motive behind CBDCs, and the potential new adoption and connection of CBDC projects could transform the world of finance. Yeah, it contains many risks. So the current fund flows or money flows couldn't be monitored. Financial stability should be reinterpreted, and the dollar weaponization would be marginalized. So that is why it is very important to set global standards and creating rules as soon as possible, because the Pandora's box could be opened and things could get out of control. But it's a very pessimistic scenario. And yes, I said interoperability and CBDC connections could reshape economic and political relations. And as China is the leader among major economies in CBDC development, and Southeast Asia contains the most advanced projects, we should follow this region to understand the future of finance and macroeconomics. So thank you very much for listening to me. Any questions now?
Awesome. So thanks a lot for the great presentation. I would propose then we can have like 2-3 minutes questions or 5-minute questions if you wish.
Any questions now?
Yeah.
Yeah. I cannot hear anything.
So if there's no more question, I hope there's no more question because again, I'm a little bit behind, like in 30 seconds behind the streaming. Then I would propose I would have a presentation a little bit more on the technical side, and then we can have longer questions and answer sessions basically at the end of the session. Okay. So basically. Sorry, there's one question: when will be the paper out, and where can we find it? I would propose that we answer this question at the end, basically in the question and answer session. We're not gonna forget it for sure. So what I'm gonna have is to have a little bit more in details some of the CBDC technical considerations. And I try not to be very much scientific, but I hope I can cover a couple of important points. So this is actually an old slide. It was somehow like 3 years ago. This is like a comparison between Bitcoin and CBDC. And well, of course, this comparison is not 100% correct because, I mean, you might ask, so do we really need to compare Bitcoin with CBDC? So do we really need like CBDC with blockchain? And the answer is not necessary, but I mean, despite it's an introduction, it might be a good idea to just make some comparison basically between the two technologies. So we can compare the stuffs like we can have like 2 layers independently if we speak about like on blockchain or on some other topics. And this is 2 layers is usually one is the infrastructure, and the second layer is basically, let me just call it as the application. So if we have these 2 layers, and again, so usually we regard it as some kind of blockchain infrastructure and the application, but it might be some other payment solution as well. So if we regard these 2 points, then we can say that Bitcoin is very much decentralized, basically, both from an infrastructure perspective and from an application perspective as well. I mean, application is basically sending transaction from one people to another one, basically. If we regard CBDC, it's much more centralized, especially on the infrastructure side. So we don't have either blockchain nodes or payment nodes anywhere on the world, but just with some very special dedicated companies, very special payment providers and financial institutes. In terms of applications, like sending transactions from one to another one, CBDC probably not as public as Bitcoin because it has some limitations, like, I mean, especially in KYC or AML or perhaps geographical limitation. But despite even on a transactional level, on an application level, CBDC try to capture probably as many people as possible. So it's pretty open. There's some other points as well. It's like the governance of the system. So like if you say like what's the monetary policy behind Bitcoin, we get like 21 million Bitcoin, and that's the hard cap of Bitcoin. Actually, this is not exactly true because I mean this is of course hard coded in the code, but it can be actually changed supposing that everybody agrees or every miner agrees basically in the community. So it is said to be a hard cap, but I mean, to put it with a little bit other words, it can be set with the help of a very broad community agreement. On the contrary, CBDC is something which is usually, I mean, the monetary policy will be somehow set by central bank or by an agreement of different financial institutes. So I would say that such a monetary policy agreement is set by a smaller group of people or institutes, basically. There's something as geography. Geography is a Bitcoin. I mean, it's scaled up to the whole world. Regarding CBDC, it's gonna be more located to one location, to one country. But I mean, as we just seen practically in the last presentation, as we saw in the last presentation, I mean, many countries try to extend this CBDC beyond its geographical limit. So it might be more broader than basically just one country. There's something as storage. It's pretty much questionable how the storage look like. In Bitcoin, there's a private key. If I have the private key, I have the money. In CBDC, there are different ways of doing this. There can be like a private key-based, token-based solution, but there can be a more classical way, like similar to having a bank account at the moment. Regarding the application and transfer side, basically, I mean, everybody can transfer Bitcoin from a technical point of view. In terms of CBDC, it's gonna be more limited with some KYC and AML policy probably. And there's the last aspect is the operation, but I think it's gonna be pretty much the same. So I mean, all systems got today's like 99.999% uptime. So this is not such a huge difference. I got one more slide. This is like a little bit comparing like different. I wouldn't say financial instruments, but like, you know, I mean, crypto financial instruments and CBDCs. And then we got like 1, 2, 5, 6 different dimensions here. The first one is the central bank issued. The second one, if that's financial instruments, I don't say money because it has some more specific terms, but let me just say if the financial instruments is a legal tender somewhere, if the financial instrument is central bank backed, if it is pegged to a fiat currency, so if it is in parity regarding of price stability, 1-to-1 to a fiat currency, if it is peer-to-peer, and if it is programmable, basically. And having these 6 dimensions, we can compare some of the financial institutes. So we got cash. I mean, a lot of people don't like cash, but I think cash is a good technology, even if it's not digital. It is basically central bank issued. It is a legal tender, central bank backed. It is fiat pegged. I mean, it is a fiat money, of course. It is peer-to-peer. It has actually a couple of like good anonymity and pseudonymity properties as well. Unfortunately, it is not digital and not programmable. So hopefully, like retail CBDC, we're gonna cover just in a second what's exactly retail CBDC. Retail CBDC will cover all of these aspects in the future, or perhaps already in initiatives as well. It's important to compare some other financial assets as well. So we can have something as a synthetic CBDC. Synthetic CBDC is not issued by the central bank, and it might not be used in legal tenders, but it is issued by for instance, so-called e-money providers. But it is backed by a central bank. It is pegged to the fiat money, so it is in parity with fiat money. It is peer-to-peer and programmable digital money. If we compare it with some other such financial instruments, if we have like asset-backed stable coins, that's like USDC or Tether, if you're familiar with the crypto words. So these are such an instruments that are basically, of course, not central bank issued. They can't be used at the moment, as far as I know, in legal tenders. they are not backed by central banks. They can be actually fiat pegged. So like USDC is a stable currency, or Tether is a stable currency. So it is somehow pegged to a fiat, to dollar, for instance. It is realized, I mean, they are realized with a peer-to-peer system. It's blockchain in these examples, and they are very much programmable at this moment. And last but not least, we can have something as a crypto asset, as a classical crypto asset. It's like Bitcoin or Ether. They have the properties peer-to-peer programmable very strongly, but of course they do not really have the other attributes, the other properties. So going a little bit more into technical terms, what we can take a look, of course, is the levels of the system. And regarding CBDC and levels of the systems, usually we can talk about two different kind of systems. There's the one-level CBDC and the two-level CBDC. So you can see something in this, which is, I think, more common, but I'm not a financial expert, actually. So what you can see here basically is a two-level system. We got like a central bank somewhere. This is actually the digital dollar project. So we got this Federal Reserve at the top of the picture. And then there's actually one system which is called wholesale CBDC, which makes transaction between different financial institutes and the central bank. So this is a pure institutional CBDC system. And there's another one as well. The other one makes some transactions, some services between financial institutes like commercial banks and basically end users. And there can be actually a strong distinguishing between the institutional version and the end user version. So it's not absolutely coincidentally that we distinguish these two systems and we say, hey, this is at the top basically a wholesale CBDC, and we say for end user digital currency it's kind of a retail CBDC system. It's because, I mean, the two systems might have totally different system, totally different technological realization, even different technologies and platforms. So we might as well have something as a blockchain for retail CBDC, and having an absolute classical money system, money transfer system for wholesale CBDC. Or on the contrary, we might as well have a wholesale CBDC practically for interbanking communication and interbanking value transfer. But despite we use something as cash on an end user side. So all these scenarios are possible. And this is a so-called two-level system. There's another possibility of having one-level system as well. In one-level system, practically a central bank has direct service for end customers, for end users. I think it's perhaps in Sweden, if I'm not mistaken, not a two-level, but a one-level system is considered rather. It has, I mean, on the one hand, it has more technical challenges because, I mean, one system should cover all, which might be more difficult to design. On the other hand, so people usually don't like the one-level system because, I mean, if central banks do direct operations with end customers, then there might be some intermediaries in the middle that are no longer necessary. So it might cause the whole structure of the financial market, I mean, going a little bit in a wide direction, which should be avoided for sure. So this is the two levels. We got wholesale and we got like retail, having different implications for the technology, of course. This is another distinguishing point. I mean, and here is the question: is what kind of a CBDC model do we have? Basically, we get like two major ideas or two major versions. One is a token-based model. A token-based model is just like cash. So basically we got like two parties, or we got like two people, and then they can just exchange a kind of token, which is like a piece of paper or a piece of money, and they can do it without too many, I wouldn't say absolutely without, but without too many intermediaries, almost directly. So if you just consider this kind of model, then basically here, I mean, if you consider cash is basically exchanged directly, so there's no intermediary at all. Similarly, if you have here like cryptocurrency, then there's basically a network that settles that transaction. But basically that network is pretty much autonomous, can't be really influenced, or can't be really done anything with it. So we can say that if this token is basically a cryptocurrency, then we have almost no intermediary basically for the exchange. The other model is the account-based one. In the account-based one, it's more like the banking system at the moment. So basically, we get two parties. The two parties want to exchange basically some kind of a value, and then it looks that way that A party goes to an operator. We can say operator. It's usually a commercial bank, and say, hey, I want to make some value transfer. So operator 1 makes the value transfer for the operator 2, and then operator 2 basically makes some accounting on the account of party B. This is actually party B, not party A anyway. So this is like an account-based model. It's much more based on basically intermediaries, trusted intermediaries, than the other one. Let me just take a look in my chat in the middle. So this is the classical two type of CBDCs, and I would say it has some implication on the technology as well, because like considering an account-based model, you don't necessarily need blockchain for an account-based model. So it can work very well without any problems with the nowadays financial institutes and actually money transfer technologies. Actually, there's surprisingly, especially in wholesale CBDC, there's initiatives to put distributed ledger into account-based CBDC models as well. And especially it looks that way that basically in wholesale CBDCs, what's happening in an account-based model, it's not end users, but it's basically financial institutes or banks exchanging IOU models or IOU, kind of an IOU contracts. And the administration of these IOU contracts can be realized pretty efficiently with a couple of distributed ledger technologies, like with the help of R3 Corda. We're going to cover that a little bit later. But if you consider like token model, I would say token model in token model, basically blockchain-based technology provides a lot of very good properties for a token model. So in token model, if you have something as a digital signature for the exchange, if the token that you exchange is, more like a poker jeton or basically more like a piece of money, it can be much better handled actually than some other abstraction. If you have basically a ledger where you can take a look on all of the movements of your token and verify all of your movement of your token, that might help a lot as well, and so on and so on. So I would say, considering the token model, probably one of the best solution is to consider some kind of a hybrid blockchain solution. With account model, it's not so much necessary. So this was basically an introduction. Let me just take a look some more design considerations. So like we can have several general categories. One category might be like the architecture of the whole CBDC, the IT architecture behind the whole stuff. Supposing we are speaking about IT architecture, then the important stuffs are if it's an account or a token-based model, Basically, it can be a hybrid one as well. So if you just consider that we want to build a two-level system, then we might as well say that the wholesale part will be actually account-based, but the retail will be token-based. So that might be a possibility as well. The most important question, and this is a very good and very general question, is if it's centralized or decentralized. I would say the question is not so easy. It's never centralized or decentralized. It's the question is how much it is decentralized or how much it is centralized. So it won't be something on the edges, but something in the middle. And then centralized or decentralized can be asked not just for one property of the system, but actually for a lot of stuff. So, for instance, how much is the infrastructure centralized or decentralized? How much is are the end users? I mean, the users of the transactions are centralized or decentralized? That would be the question. The governance of the system. How much is the governance of the system centralized or decentralized? Like setting the issuance policy of the given CBDC token. Who needs to be decided for that if we want to do something there? How much is that decision process centralized or decentralized? What about upgrading the system? I mean, having a new version, a new IT version of the system. Who can decide if a new IT version should be installed or not? How much that decision-making process is centralized or decentralized? So I would say this topic basically affects a lot of things. It's just not so easy to analyze this attribute. The next one is basically security. So security is a very complex question as well. Basically, in like blockchain systems, you can see there are like 3 sources of security. And then if we use blockchain, then we can analyze these 3 sources of security. First, we got cryptography. So basically, it looks that way. We have a complex system, which is basically a CBDC or even 2 CBDCs, having the wholesale and the retail stuff as well. And then there are certain properties of this system. And then the certain parts or properties of the systems can have different security guarantee. So again, one possible security guarantee is that we have cryptographic security for certain parts of the systems. Like for if we want to start basically a transaction, we can have something as a digital signature. That's a cryptographic guarantee for a certain system security. We can have something as economical security guarantee. Like for instance, in public blockchain systems, there's the so-called economical security margin, or if I'm not mistaken, that's the correct name. It means that, for instance, in Bitcoin, for double spending a coin, there's no cryptographic guarantee, only economical. So you can do double spending. It costs you so much money that it's not profitable. But this is not a cryptographic guarantee, only an economical, basically. And then, especially in consortium blockchains or like in CBDCs as well, we can have something as institutional guarantee as well. So like instead of double spending in Bitcoin and having an economical guarantee, we might as well say that, hey, for double spending, basically in a CBDC setup, there's an institutional guarantee. You can double spend, but majority of the financial institutes must agree on that, and then you can double spend. That's a classical institutional guarantee. So basically, analyzing security is such a complex task as analyzing centralization and decentralization. The next one is interoperability. It's just in one word or one sentence. In a CBDC, I mean, a CBDC should practically cooperate with everything in the countries. So I mean, basically, all the current somehow value transfer systems, money systems, and all the stuffs that are somehow attached to any kind of money moving IT functionality must be interoperable with the architecture. So yeah, it's not such an easy task. More like blockchain or non-blockchain question is performance. Of course, CBDC must have like, I don't know, I would say at least like 10,000 transactions per second. Especially public blockchains do not perform very well in such a performance. So like the Bitcoin has like, I don't know, at most 7 transactions per second. Public Ethereum is like 15. They are of course not really suitable for a CBDC use case in this version. Another topic is privacy or transparency. It's like blockchain systems weren't exactly designed for having the same privacy or transparency guarantees that are classical in like classical financial institutes. So there can be a lot of issue here certainly. I would just cover the rest three in one category. So one big aspect is basically if I say CBDC, of course, the question is what's the category that we regard. But if I say CBDC, I just don't mean that we got something as a digital money moving from place A to B. What I'm thinking of is that there's kind of a financial infrastructure that is programmable, has in a kind of sense smart contracts, and basically you can do like tokenizations on a short run, or you can do any kind of further use cases that are coming. So if you just take a look what's happening on the public blockchain space, basically people are defining DeFi, decentralized finance, NFT tokens, and stuff like that. And of course, especially in a public blockchain area, they are very much in an experimental phase. But supposing that it is already visible that some of the like DeFi protocols will succeed and can be adapted to like in a CBDC framework as well, or some of the NFT token, for instance, use cases really succeed and can be adapted to a CBDC context, then it will be a very, very big advantage if we can adapt them. So if we have a CBDC system which is programmable, if you want to program like NFT, it's possible. If you want to do kind of a DeFi protocol in a more regulated context, it is possible, and so on and so on. If there's such a use case which we don't even see at the moment, because it will be coming like in 5 years in the DeFi space, but could be adapted to a CBDC context, then it's important that the system is capable of adapting such a use cases. So this is like the architecture consideration. I got some policy considerations as well. I'm not so much in the policy, but I'm not so much expert in the policy. Sorry, to put it exactly. But these policy considerations might affect very strongly the technology as well. So again, centralized versus decentralized, that's a very complex question, including both architecture and policy. Governance is again a very, very complex system, covering practically a lot of aspects of the system. Of course, token issuance and token supply is a question. Is there a programmable issuance or supply of the digital token of CBDC, or is it decided by some policymakers? Then the question is, who are the policymakers? Supposing there's new token in the system, who gets it first? Or supposing that we want to not increase the supply but decrease the supply, it can be actually managed technically. So what do we do in that situation, and who decides it basically? There's of course a lot of legal implications of that. I'm not so expert in this topic, so I can't speak about it. It's usually like a social inclusiveness. So basically, one critique of the classical financial systems is that they are not so much socially inclusive. That might be possible with like Bitcoin, but I would say one such a design decision or architecting decision might be, if there's a new CBDC system, then it might be designed more to regard or more to better this social inclusiveness as well. So privacy is, again, it's a policy and it's a technological question as well. I would have two exciting points here that might not be covered actually normally in CBDC. So one is basically offline use. So it might be surprising that we speak about a fully digital currency and we speak about offline usage, but just consider the fact that, I mean, there's something as an internet outage. It's like a global hacking, or there's a disaster, and basically for 2 weeks the whole, I mean, not the whole internet, but the internet of the country is down. So it is practical if CBDC has some kind of a backup solution that works, even if like network is down for 2 weeks or network is overloaded by distributed denial of service attacks by some hacker groups, and then we do not really have practical usage of the internet for 2 weeks. Then it is not very practical if, in that case, I mean, the monetary system stops. So usually there should be some kind of an offline usage. It can be, I mean, still cash. That would be one way. There might be some other brainstorming as well, like using signed transactions, even in a printed form or something. Of course, there are some limitations as well, because, I mean, if we have a signed transaction, we can't really avoid double spending. But it might work. I mean, there should be something designed which might work even in a limited case in case of network outage. And last but not least, systematic risk. So usually it is said that the financial system has some systematic risk. I can't decide it, but usually people say that I mean, so with the help of like such as CBDC systems or even cryptocurrencies, the systematic risk can be avoided. I have some experience with DeFi, and I would say this is not exactly true in this form. So like in DeFi, for instance, even if everything is blockchain, everything is cryptocurrency, and basically everything is run by smart contracts, there's a lot of systematic risk. Of course, this risk is probably different than in the classical financial system. But I mean, despite of CBDC, despite of blockchain, despite even cryptocurrency and smart contracts, there will be some systematic risk that should be avoided or made as minimal as possible. So some more aspects, I already covered some of these topics, but just going through on the list very fast. So one technical requirement, it's actually another list, so that's the reason. Basically, I have some items which you found previously. So the control of the money supply is either by central banks or by some limited group of institutes. What's important is basically the performance, and here is where actually blockchains do not perform very well. So we need something as a quasi real-time asset transfer. I mean, there can't be such transaction cost like nowadays on the Ethereum or Bitcoin network. So it's like in such cases you pay like, I don't know, $10 for making a transaction. It is certainly a no-go in a CBDC use case. It's again performance. We need something as a high transaction throughput. So like I would say like from 10,000 transactions per second, which is not easily solved by distributed ledger systems. Then we need a large number of network participants. What's perhaps surprising or not usually mentioned is user experience and user interface. So usually if you have some kind of a blockchain system, then the user experience goes usually in the Web3 direction. Web3 direction looks that way, that we got like keys, we generate these keys, we store these keys in a wallet, we are responsible for these keys. So supposing we lose the key, so we are responsible for backing up or restoring these keys, or basically for the security of these keys. So this is a strong web-free user experience. And well, I would say surprisingly slowly people, especially like in the crypto space, are adapting to this user experience. So I mean, there are initiatives, of course, giving like classical user experience in such a crypto situations as well. But surprisingly, many people have just adapted to having this web-free user experience, and they use it. But I mean, despite, I wouldn't say that in like a CBDC use case, a normal citizen or normal people will adapt very fast and can use something as a web-free user experience. I mean, like generating keys, storing the keys, having my own wallet, and being fully responsible for the security and backup and restore for my wallet. This is again one category. It's like the privacy and confidentiality of the data, especially with like KYC and AML regulation. It's not easily solved or not very simple solvable in blockchain. They were not primarily designed for matching KYC or AML regulation of classical financial institutes. There are initiatives, and there are of course good initiatives, but this is a challenging task, of course. This is regarded a little bit to the user experience. It's like asset recovery. So again, what happens if I lose my key? And then in crypto, if I lose my key, I lost my token, I lost my asset, I lost my money. But probably this is not something which is accepted in a CBDC use case. So something for asset recovery must be considered. It can be even realized actually in a crypto space as well. It's like having a second key and a third key. And then if I lose my first key, then I can use my second key. And if I lose my second key, then perhaps my third key is not stored by me, but stored by some custodian institutes. And then they can actually recover my asset. So there are workarounds for that, but it's despite an issue. And last but not least, it's the acceptable environment impact. So basically at the moment, like Bitcoin and Ethereum networks still working with proof of work have such an environment impact that can't be really accepted on a very long run. So it's not something that can be designed for a CBDC, of course. So I have like 3 more slides, and then basically the next 2 slides or 3 slides, what I'm gonna cover a little bit. So these were the points actually that should be considered from a technical perspective when designing basically a CBDC. And so I'm more like a blockchain distributed ledger expert. So what I collected is basically it's a couple of examples of architectures that were proposed for CBDC use cases. And I know basically like 3 or 4 ones. There are 2 on the slides. So this is the first slide, and this is basically an Ethereum a possible Ethereum implementation. I'm not quite sure if it is really used, but perhaps it is already experienced. Anyway, this is a consensus proposition using the Ethereum technology for CBDC use cases. And it might be surprising because Ethereum is not so much, I mean, it has performance problems, it has scalability problems, transaction fees high, asset recovery is not solved, and so on and so on. So it is surprising that Ethereum gets something possible. But basically, there are some good ideas how Ethereum can be used in a CBDC use case. Actually, this is a consensus proposal. You can find basically the link at the bottom of the slide. So basically, the idea is the following. First, we get like public Ethereum, but if we don't use public Ethereum, we can use Ethereum in a consortium setup as well. Consortium setup means that the nodes are not running by everyone, but basically the nodes are run or are running in special financial or regulated institutes. This implies actually that the consensus algorithm can be changed from like proof of work or even proof of stake to proof of authority. So it means basically that the network can be faster, a little bit faster. I mean, it can be like 10 times or 20 times faster. I don't know. It's you can get like 100 or perhaps even 1,000 transactions per second. So it's not so much faster, but certainly faster actually than at the moment with Ethereum. And then basically the idea is this picture represents a two-layer system for CBDC. So there would be basically a consortium-based settlement layer at the bottom, which connects central banks and basically some highly important financial institutes as well. I'm not quite sure if they are commercial banks here, but something similar in the direction. So the problem is that basically, even if we have consortium Ethereum, this like even 1,000 transactions per second might not be enough. So what we use is that's called a state channel. So in a state channel, what we do basically is we do something as an initiating transaction on a blockchain. It is called as well anchor transaction, but it isn't so important. And with this initiating transaction, we open a channel with a party where we can transact transactions like sending money or sending value or token with the party without having any collaboration with the blockchain. So that's what happens. If I want to transact directly with one organization, I can open basically a state channel that requires something as an anchor transaction to a consortium blockchain like here. I can send as many transactions as I want directly to that organization. And then basically at the end, I should somehow close this channel. So closing the channel means again having basically a transaction on a core blockchain somehow. So the basic idea of state channels is that I have like two transactions on a blockchain on an Ethereum consortium network, and basically like opening and closing the channel. And in the channel, I can have as many transactions as I want. So practically, if I can use state channels, it's more like directly cooperating between two organizations. But if I use state channels, first, I mean, I can have as many transactions as my bandwidth. So I can send, theoretically, if I have enough bandwidth, I can send million transactions per second. There's no such a limit. On the other hand, basically, it's more private because everything happening on that state channel is visible only on that state channel. Only the initiating transaction and the closing transaction, which will be published to the core Ethereum blockchain protocol. So this is the second idea, and basically these two ideas are used, and there's basically a third idea as well. So we can build up basically Ethereum consortium Ethereum networks in a hierarchical ways. So we can have something as a side blockchain or side channel as well. So like having a second consortium blockchain which has some transactions in the main blockchain, but otherwise working independently. And the idea is from consensus having a two-layer, both wholesale and retail CBDC structure in a way that basically combining consortium Ethereum networks with state channels and side channels and sub-blockchains. So this is one idea. The second idea is from a special distributed ledger provider. It's called the R3 Corda. It is usually used in wholesale CBDC or proposed in wholesale CBDC use cases. Sorry. And the idea is actually that, I mean, R3 Corda is not a blockchain. It's a very special distributed ledger technology that was built up fit as much as possible with the exact requirements of different financial services. So the idea of R3 Corda is that we get some special properties, like we don't have like global blockchain. We do not have like global ledger, but what we have is something which is called shared facts. So if you just take a look on this picture, we get like Alice, Bob, Carl, Demi, and Ed. They can be institutes. So usually they are institutes needing to collaborate with some cryptographically secure ledger use case. And then if you just take a look, like there's this one fact, it's called one, or this can be actually a contract, or this can be any kind of information that is even cryptographically secure. So basically this one is shared by Alice and Bob, but basically this one is not visible for the other parties. Similarly, if you just take a look on 7, it's basically visible to Alice and Bob, but it is not visible for the other parties. If you just take a look on like this free fact or this free contract is visible to Carl, to Ed, and Demi, but it is not visible for the rest of the network. And again, similarly, if you just take a look on this 9 is visible only to Carl and Ed, and basically it's not visible to Demi, to Bob, and Alice. So this makes some very strong privacy guarantee that fits very well actually in a wholesale CBDC scenario. So this is one idea. Facts are shared on a need to be basis. There's no global ledger, and there can be many. So there can be many use cases configured. So as you see, for instance, if you just take a look on this fact, this number 3 fact, it's distributed on 3 parties. But if you just take a look on this number 1 fact, it's distributed just on 2 parties. So there can be many different configuration, having from totally decentralized to centralized, and anything in the middle. And it can be configured, which fits very well in a wholesale CBDC requirement. And there's one more interesting point which fits again very well. So basically, it looks that way that there's this so-called contract, which is not exactly a smart contract here, but contract means a normal written but digitized contract, basically. So it's an official contract of some legislation. And basically the ledger itself is the evolution of such a contract. So it looks that way, that we get a historical contract like Bob owes Alice with 10 pounds. Then there's some change actually, which is a transaction. And then Alice pays back like 5 pounds. So Alice owes Bob just by 5 pounds. And at the end, basically, Alice pays back everything. So the agreement is expired. So the point is basically that these are like official contracts, and the ledger itself is an evolution of such a contract. And these contracts can be like, if it's an IOU contract to a central bank, then we have something as almost as money, basically, going through on the ledger. We have something as notary service as well, as we do not have global broadcast. There's a notary service that makes sure basically that there's no double spending and everything is correct on the ledger. And this notary service is configurable. So again, you can have something as a fully decentralized, semi-decentralized, or fully centralized service for such reasons. And of course, for this reason, our privacy is again pretty good. It's simply because certain facts are not shared with certain parties. So it means they are not there, they can't be seen. So basically that's the R3 core ledger, and wholesale, as it was mentioned previously, wholesale CBDC use cases usually like this technology. So basically this was my presentation. I hope I could manage to get some insight into the technological challenges of CBDC. And then I would switch to a question and answer session in which I'm not quite sure how I do it. But anyway, so if you can post me, you can post any of the presenters. They will. I will hear you in like 30 seconds delay. But if you just ask a question for me in the chat as well, I will surely see. So this was the presentation, and I would just put back basically the original picture.
Thanks, Daniel. I just answered a previous question in the chat, so so that's my answer for it.
So if I correctly see it, we got some questions. And then let me just try to answer them. And I hope I did not interrupt anybody. So there's one question: when will be the paper out and where can be found? I think it was for one of you guys. If I correctly see it, we got some questions. Sorry, that was me. That was me on YouTube as well. So anyway, regarding the paper, I think so you will find basically all these presentations just below the meetup on meetup.com. I will send the link, and I think I will send the link on YouTube as well. And then as soon as some paper out, then we can update you guys as well. So just one comment: it's not programmable. What's really necessary? Just a central bank real money asset to security breach that out to other programmable DLTs. Yeah, it's a good question. So how do we exactly regard like programmability? One way of like having a two-way peg somehow between two blockchains, and then we can make like kind of a version of like atomic cross-chain swap between one blockchain and the other one. And then we do not necessarily need like something as programmability or smart contract. That might be one way. However, I'm not so sure if it works, if it always works. So the point is like, if you want to connect two blockchains, it's like one way is the atomic cross-chain swap, but that might work only in certain situations. So like if you just exchange token, it works because there's an economic incentive of making the protocol in a correct way. But if you want to extend for any kind of general use case, it might be difficult. But anyway, this is just my point of view. So it might be enough, instead of programmability, just connecting basically a CBDC with a programmable DLT part. I'm not quite sure what's interesting graphic hybrid blockchain model. So what we speak of here is not, so CBDC won't be realized actually with a simple blockchain technology. That there won't be anything, I think, which is a pure blockchain and it's sort of CBDC. We speak of hybrid models always. So there must be some extensions, there must be some combinations, and so on and so on. Yeah, I did mean R3 Corda. So notary service in R3 Corda is basically, it looks that way. So you get a transaction, you can, so your ledger is basically an evolution of contracts. You can have a transaction that are signed by different parties, and then basically you can even program how this flow works. So who should sign that we have basically a new contract from the old one. And basically, so notary service does two things. First, it checks like there's no double spending. Second, it checks if this signature structure is correct. Again, it's not so simple as like in Bitcoin. There's not one signature, but you can somehow configure and program who should sign in one situation and so on. And checking these stuffs is done by the notary service in R3 Corda. Submitted. Thanks for your question. Okay, sorry. I'm just reading it through. How download slide files. Again, we're gonna update below YouTube as well, and basically on the Meetup channel as well. So you will find all the slides. Yeah. So you're right. Basically, this is a Hyperledger meetup, and unfortunately, I do not really know if there's Hyperledger CBDC proposal, but perhaps it's coming in a long run. So for this reason, we just went a little bit in another direction and did not cover very special Hyperledger technologies. We're gonna do it in the next session. Okay, so then theoretically there's something which with CBDC files with Hyperledger EOR and more are coming. Yeah, I didn't know it, but then so we have like Hyperledger EOR that is being experimented actually with CBDC. Actually, we knew about one such a proof of concept with like Hyperledger Fabric, but as far as I know, it wasn't realized basically. So I hope I have all the questions. So I just mute myself and I just give like 2 minutes. If you have some more questions or some other topics, perhaps for the other presenters as well, just be aware that if you issue a question for me, I'm in 30 seconds delay getting these questions. So if there's no more question, then let me just share my screen again. And then I would just like to thank you very much for your attention. And then sorry for the technical difficulties from my side. It's just, again, I mean, it's one of the hottest days actually in the region, and then somehow it affected my laptop as well. But I mean, despite, I hope it didn't cause such a huge problem. So again, thank you very much for your attention. So if there's no more question, then let me just share my screen again. And then I would just like to thank. Sorry, that was me. So again, thanks for your attention, and then see you next time.
Thank you very much.
Thank you. See you.
See you. Bye-bye.